and it had a bounce, it doesn't want to continue falling. It's just, it doesn't want to. If it did, it would post a candle higher right away, then a candle lower, then another one lower than the previous high, and then maybe do a little bear flag, and then just continue doing this. But in this case, we don't have it, we don't see it, so we should assume that this is going to hold, and we have at least one or two candles that we can take profit on. These are the two candles that are materializing right now. All right, so that's clear. Momentum is, thinning out over here, so maybe it'll pump. So these levels, it's very clear when you look back, right? So the question comes then, we need to ask ourselves, why don't we trade these levels when we see them? The answer is very simple. Most of you, I'm not pointing fingers, and excuse me if I'm being blunt, but most of you are on a 15-minute chart. Most of you are looking at a 5-minute time frame for the intraday daily CPR levels with oversized positions, looking for a quick in and out trade, as opposed to going to Steam, downloading some game. I'm serious. Playing it on one monitor and having this exact chart open on the second monitor. And as soon as price, and you're playing for 4 hours, 5 hours, it's not what I do, but I'm just saying, if you're on lockdown, you have you need to occupy yourself. So your itchy fingers don't go and start clicking these intraday 15-minute time frame trades. You need to occupy yourself and sit back and do nothing. Jesse Livermore said, money is made by sitting, not trading. You should be able to occupy yourself past the time. If you step away from the charts, if that's such a case, right, you get desynchronized. When you come back, you rush yourself in and you're thinking, okay, maybe. The first thing that you see, the first pyramid, the first sign is when you want to get in, but that shouldn't be the case. So you need to find something. What I like to do is I turn on a movie. Now each movie, you have a movie that Mortal Kombat, for example, great movie, runs for about 2 hours. Justice League, whatever, 4 hours. Now if I'm aiming to scalp or get in on a 4-hour candle, and I know that this consolidation could take up to 8 to 16 hours sideways, so I multiply. My rule is 3 to 5 candles later. If it's not going lower, then it's going to stay here. So if I see like a wick, I see a level, I see my previous level over here, I see that it bounced, and I see that it refuses to go down, because otherwise it would be invalidated pretty soon after the first bounce. It's going sideways. Now I throw in a movie, and now I'm busy. I'm looking at this chart and I'm watching a movie at the same time, and I count candles. I see 1, 2, 3, 4, 5, and we have a recovery. I don't even look at a lower time frame. I look at this candle and I say, okay, this candle can go to maybe HC, but since I'm expecting another candle higher than that, I will probably be able to get in anywhere on here and make money. And so I simply cast a ladder for like $200 distance, because on average, if you look at a 5-minute, so if I need to wait 30 minutes or 1 hour, that means on average I need to survive close to $300 to $400 worth of price fluctuation. So once I see a full candle, I go 200 deep. So right here on the close, price kind of dipped by 300 points. Okay, you got filled up, price moved a little bit, you sold, and now you're chilling and waiting because you know you're in the middle post recovery, and you need for this to either do one more dip, which is very unlikely now, but do one more dip, and then one more up, and then one more down. So I have about 8 to about 12 hours or so, which means I'm not trading now because I'm about to go to sleep. and I'll wake up and I'm not going to miss anything, and I'll see some sort of setup because that is how long it's going to take for this to play out. So this tip is something that you need to. I recently, yeah. By the way, thank you for inspiring me to upgrade my junk here with hard drives and everything. Whose whose Discord is that? Is that my Discord? That was weird. Okay. So yeah, you occupy yourself and you train for maybe try this for a month. Okay. All I'm asking from you is give me one green monthly bar where you do this, where you switch over to a 4 hour time frame. You size up a little heavier when the time comes instead of, so you're not trading, you're cutting your trading by like 3 to 5 times versus what you're doing now. So you're cutting your trade time and the frequency of trading especially, and you're waiting most of the time and only executing once or twice. But that is going to compensate. So if my average is about $500 a day, and if I make 1,500 per trade, I just bought myself 3 days worth of analysis time where I can take my time and sort of, it's not that I have to make it that much, but when it happens, it's really nice because you can that gives you the time to wait for that high probability setup. Now, I'm still not advising you to go short. Rather, when we approach these levels, you back away, and you will see two instances of price rejection and recovery. So first is going to be at HC, and there's a small chance of recovery. Second is going to be the weekly level. While intraday on the 15-minute playing through that daily, which given the volatility right now is not very reliable. And then finally, as the month comes to an end, to about the 20th, 25th of the month, you switch your DSR to a monthly time frame now. And if you see that price is very close, so let's say we're this red box, if price is very close on a monthly time frame, monthly CPR to that CPR support level S1, then you're throwing a single limit order there that is a little heavier, beefier, that can handle a one month of an uptrend or a downtrend. So, for example, if it starts crashing from these levels, 59, I think we revisit. But if it goes down, then you're definitely looking for that monthly. But you're looking at it for the end of the month. So the monthly open, when it opens, it's probably going to go the other direction because the second half of the month, starting from 4 days from now into the weekend, if we start going lower, lower, lower to the end of the month, on that monthly open, we'll probably go up. So that's your thinking. And intraday trading, you need to either do a movie, and it has to be okay. You cannot say I'm going to go for a walk or go for an exercise unless you have some portable setup. You need to be synchronized with price action so that your confidence grows more and more as you keep watching the charts. So if you're cooking, if you have like one of those fridge TVs or built-in, like I don't know, like some sort of maybe your iPad, and you have your chart there, then you can be looking at that. And as you approach these levels, you don't get in early. You're saying that these levels are magnets. So you just strictly sit there with a couple of orders and you just wait. You don't do anything. And price exhaust at these levels, price exhaust, like everyone's getting slaughtered in between here. Imagine looking at this candle on a, I don't even want to switch to a 15-minute time frame to see what's been going on there. I'm not interested because it's not like I only have 15 minutes. So the equation here is if you have little time on your hands. So, okay, so we need to talk about this. So imagine people are saying that, okay, I have work, I have stuff to do, I cannot be at this. Give me some intraday setups. how can I better learn swing trading?
There you go. Let's
In
go.
reality, when you don't have time, you're scalping. You're not swing trading. So actually, like sitting at the charts 24/7, hyper focusing, to get in on a swing, if you miss that swing because you don't have the time, it's actually easier to miss that swing than to miss a in the moment 5 minute, 15-minute setup that you can play quickly in and out using the techniques and strategies that we have been discussing here, where you can size up accordingly, put a stop loss, and play it that way. Now this is more, and so scalping becomes a very efficient way to trade for those who actually don't have a lot of time. The analysis that they would use is for someone who's swing trading, because a scalp becomes a swing. You just don't know if it will. But every time you enter, it's a small profitable trade. It should be directionally, and then it can manifest and evolve to become a swing position where price rapidly moves away from your strong pivot level on weekly or monthly, such as this, that, or this level now. And then the sooner that happens, the better, because now you're so far away from your entry that you just chill. You can go to work, you can do
Yeah,
whatever the hell you
that's
want,
the dream.
and price moved away by 2,000 points,
Yes.
and it'll probably still be a profitable position by the time you go to work, go to sleep, come back tomorrow and check it. You might lose some value of that initial entry, or you might even multiply in value and go ever higher. So yeah, what I'm saying is the whole industry, everyone, people have it upside down, and so we need to get rid of those concepts that we have learned elsewhere. If you've been, I don't know, studying wherever, you need to give that all up, because swing trading is actually for people who have the time, because they need to monitor it and they need to execute at a very precise level. And you can't leave an order sitting there and not look at it, or you can, but it has to be small. Uh, and you're more actively managing a little scalping position when you don't really have time, but every day you can dedicate about 1 hour to 4 hours of trading, maybe before bed or after that. And that shouldn't be a problem, but you have to look at these levels. If you're like right here at level, there's no entry. Your entry is only close to the inside of the CPR range, green, gray, and red. And that is going to take a long time on weekly. So while we're here, when we look at 15 minutes, we automatically assume, oh, okay, so I saw a comment in the platoon that said, oh, price is getting rejected. We don't know that. It's only been like 8 hours, right? These two candles is 8 hours, and before that it did nothing. And we had one bullish candle here that was, there's lots of interest here. Look at that volume. It was traded, and you go to 15, and you will laugh because you realize retail sold it damn bottom again here on this candle, and it got scooped up, right? Look at that. Look at that volume over here. They sold the bottom, literally. So you can expect price to move away from that on low volume, while the rest of us classical traders will look at it and be like, there's no volume. There's no confirmation. There's no volume to confirm. No. That's the point. Because everyone is scared and lacking in skill and knowledge, is they're not trading, so price will freely move on low liquidity. When there's high liquidity, it's just going to chop or create this exhaustion point where everyone went in with their mothers and grandmothers, and now the road is open because everyone is locked in that position. Price can freely move with just naturally, without any trading volume whatsoever. You ever wonder how those Inu Shiba coins move, and then these people make millions from $17? It's a liquidity thing, and so we cannot look at volume and say, there's no volume comfort. All those books, throw them out the garbage. to the garbage through the window and bury them, burn them, because that's just nonsense when people tell you that we need volume confirmation. By the time volume comes in, right here, look at it, peak, right? It's already a point where away from the pivot here, we've been trending up for quite some time. So your entries from here, like $2,000 later, you have volume confirmation here on this candle. And of course, retail goes long because they're like, yeah, now I feel good. But the market is the kind of place where when you do the opposite of what your gut is telling you, you will win, because what your gut is telling you
You did
is
the opposite.
humans can relate. Everyone else's gut is telling them that. So I don't know how it happens. Don't ask me. But it's some sort of quantum event at play where getting wrecked is sort of like there are people look at you and say, "Oh, you're a trader. You must be losing a lot of money." And that is very cringy to me, because people who
Right.
think that they tend to be the ones who are absolutely clueless about what trading is and what it can be. And they have very little data set about the kind of people that participate in the markets and what they do. So for consistency, for example, right here, right now, would I go long here? Yeah, no, because we moved away from here already. This is looking at 15. So now I'm getting confused, because I'm like, yeah, but we're at this level, but is going green. All I know is that we're gonna creep up back to
CPR.
58 and eventually the previous high. Now, how this happens, I don't know, but there's a chance that we from here go back down to this box. We only tapped to once. So tomorrow, since I had a trade yesterday and today, tomorrow I'm gonna wake up and see where the price is. If it's close to this level, I'm gonna make a call for us to get in somewhere around here for a nice instant bounce, or we're going to be exactly where we are now. Once we pump up and exhaust a little bit, some green volume comes in, and then price is going to correct, and we're going to go long somewhere around here in this region. Calling this a little consolidation phase, breakout, retest, sideways, nothingness, and then like this, right? And then everyone is going to look at this and say, oh, that was a head and shoulder pump. I see. But that's irrelevant. We don't benefit from any of this stuff. Okay, so tip number 5, occupy yourself. Look at higher time frames and bigger CPR ranges and see where the magnets are. Price is curious. It wants to explore levels, okay? There's this thing when we're very close, it wants to see what happens, how many traders am I going to be able to liquidate if I go and overextend and tap that certain level of there. I'm just curious. So you have to bet that if you're almost there but not there quite yet, you have to bet that it's probably going to be like over here, this dump. If it had one more leg down, you know how beautiful that would have been. Like you would simply put like 100K contracts here, and it will like instantly put you in profit and ride the hell away from that point, never looking back. But it didn't happen.
Okay.
Yeah, but you had like this candle up, you had your green little dot over here, a little pump, another one. There was an what's it called, the punch out setup. You're like, okay, now it's going to go to HC and retest and rest back on that level, since we broke above it on that red level. This is a weekly chart. Remember, week in progress. So Monday, people sell. Tuesday, they realize how dumb they were and they start buying. Wednesday, they get tired a little bit. Price pumps into the weekend. Everyone is free, comes home, and think they're going to make money to 60K. Price corrects, flushes them out, consolidates, messes about, and maybe one more flush out tomorrow. We'll see. but nothing has really changed here, and we're looking good. So, uh, so yeah, while imagine yourself looking at this chart, not touching it, and hell, come here to this pit voice and then like stream your game or something. You know, let us sit and watch this level without analysis paralysis, without overlooking some detail and look at the chart and say, yeah, just look at this giant candle and say, yeah, two of them in a row. Imagine what had to happen on a lower time frame, like 15 minutes, for this to materialize, like for this setup. We have one, two, three, four candles that are just like so, 4 hours, right? And yeah, maybe like this was somewhere at around 4 a.m. my time. I literally walked past my PC monitor. It was on. It's always on, and I saw like us like going crazy over here. And I look at this green level S, and it's already posted a wick over here. I was like, I'm going in. So I opened the limit, 50K contracts. It pumped up all the way like instantly. I scaled one x ATR on 4 hour time frame. All right, and it exited me on a ladder setup. Yeah. Somewhere around here. So that was a very fast one. Literally 1 hour later. And today price goes down 1, 2, 3. I'm thinking if I was short here right now, and it's not going lower, that's a bad entry. So it's probably going the other way. So you get in on that and it went the other way. Very very simple stuff here. So to occupy yourself is very important because that relates to your delayed gratification. And trust me, you're actually going to have more profitable trades if you don't trade as often, believe it or not. Um, but it's also it needs time to get used to because you will feel like you're missing out all the time because you got all these idiots 24/7 bombarding you with like, oh, look at my trades, look at my trades. Like they're streaming, they're doing videos every day. They're not concerned about you, your health, or your wallet. Only you can take care of yourself there. So you need to take care of that and trade less, analyze uh, more, realize even more, and then execute once or twice per day, and that's all you're getting. Um, whether you're busy or not, you're probably coming in at a time where you're in a good place to open a trade, and also patience for profit taking. Like as we speculate, it's better to have some position than no position, in my opinion. Any position. I have sometimes 50 contracts, 100, and it's easy to get lost when you look at people's $1 million positions, but you have to realize you're borrowing money. So if you go, for most of us, what would it take to go to your neighbor's, like if you go to your neighbor's, anyone, your friend, call up your friend and say, hey, can you give me like 10K right now? I need it. Because that's what you're doing. You're borrowing 10K from the exchange, and you're saying, give me 10K contracts. And then to you it might seem small, but someone in the exchange is like, yeah, gonna give you that, but you know what? We're gonna liquidate you and all your collateral if you play our money wrong. Because we're giving you, even though there's no leverage involved because you're under 1x, you're still thinking that these moves, they multiply very fast as opposed to like normal exchange. It consistently adds, and the fees is the biggest reason why you're profitable using small amounts of leverage, trading limit orders only. The person trading spot cannot compete with you on Bybit. If you're under leveraged and match them or even do half their size but with leverage, the fees are actually going to make you be more profitable than the spot trader. This is what you need to realize. that a lot of people don't. So, delayed gratification in the form of occupation, entertainment, walking, but staying synchronized with the chart, looking at if the week had just begun, you're trading your daily CPR. If we're in the middle of the week, like we're now, you're trading your weekly CPR. As we come to an end of the week, we are still in the weekly CPR, beginning with a new daily CPR trade. So these are just levels. And not only when I say CPR, I mean open, high, close, and low, including support levels, resistance levels, S1, S2 primarily. And in between all that, high probability magnets plus your momentum support with the good old baseline reclaim, retest, pyramid, Shazam, take profit at resistance. All of that comes in to help you manage your trade and reduce your risk as price goes up. So we're borrowing these contracts. 10K is a lot. All right. That's literally $10,000. Now, these guys, they gamify it and they're like, oh, 10,000 contracts only. You have to realize $10,000. I can buy wheels with that. It's $10,000. God knows what else you could do elsewhere with that kind of money. But like, yeah. So 20,000. If your account under that or at that, and you're going 1x, you're going double actually. So yeah, that's kind of that's a big responsibility. So you better know what you're going to do with that, because the exchange might not like it if you are not precise with your value extraction practices. So when you're itching to trade, turn on a movie, play a video game or something on your computer. I just discovered like this this thing. Unfortunately, it's too big. Assassin's Creed, I believe the name.
Yeah.
And the game is too big. So something like Doom, all right, in and out, where you blast monsters and see lots of blood. You're not touching that trading terminal. You're watching it to develop. You're watching for it to stop doing what it's doing, and then you get an entry, and then that entry you again occupy yourself for the next 8, 16, 4 hours. That window, you scale out as price goes up a little bit. You take 20%. You moved up by $400, $400. You take 20%. It goes down a little bit. So you're taking profit as it fluctuates, as it goes up, until you finally depleted all your contracts and you have a small number remaining. And then you're still thinking, okay, wait a minute, but what if it's not done? Well, you're still participating, but if it's not done, remember, if it goes down, look at this. If your entry is here and price goes down here, you're not averaging down. Remember, if your entry is here and price goes and reverses here and freaks you out, you're not averaging in. You're averaging in over here. You have to assume that, hey, if it dips a little bit, no biggie. If it dips more, no biggie. If it goes up again, no biggie. You're still playing that video game, watching movies, binging. If it goes sideways again, no biggie. Boom, you're in profit. But if you average in here, and it is a biggie, if it goes down and down and breaks this level, you're done. So if your entry is here, it has to be sized so that when we take out this low, remember, if this was set, that means we're not coming back here. You have to assume that we're going up from here.
Okay.
Maybe sideways, maybe side. I don't know how, but we're going up from here, not down. If we're going down, you're not putting a stop loss. You're just occupying yourself until all of this is over with the plan to put a single limit order at around this previous level here, closer to 51, okay? You will know when it's time to go. It's not like it's going to go back and bounce. You will know when the time to place a limit order because price will just stop and go sideways. You can go in on that level. It might go a little lower, but at that point, your average is somewhere around here. You will exit this in profit. You know a retest is coming. A retest of this break point here will occur here, and that is going to take 5 days or 1 week. That action is going to be through those CPR levels. Make sense? So don't be quick to average out. When you're underwater, stay underwater. This is the art of Sujitsu, the art of staying underwater. Okay? Entries. If you didn't get in on this wick over here, wait for a retrace. Wait for it to, remember, EQ1 could serve as a point of where the sellers are found. So we're very close to it. If we go above it and reclaim, retest, we'll use a strategy like the dragon skin, for example, if it starts to develop, or punch out. Or if this goes down away from here and the sellers overpower and this goes down, you are again getting in on this level one more time. You're getting in on this level for a double bottom potential, and you're casting a ladder from here to here with an average price here. So first entry, single limit here, then an average to bring you down here, and that has to be 0.5x at most. When it bounces, then you can add more contracts on the way up, because that will be a confirmed established bottoming out of this level. If it doesn't, and 18 hours later, 1 day later, price is still testing this level and it breaks, you're simply putting your next level at the 78 fib on the daily, on the next daily open at this white line. Okay? Don't ask me what if it keeps going lower. It won't. Okay, that's not how it works. It won't, because it will correct once, retest, and then go lower. But it will need to happen first. If it goes slightly lower, then it comes back even harder. If it goes even lower, it comes back even harder. Okay, and that's going to take a long time, a few months, because you're looking at a 4-hour time frame with weekly to monthly CPR zones, and you're averaging in and bringing your entry closer to significant levels of interest on the DSR levels. All right, hopefully that helps you understand. So the issue is not time. The issue is we're just not used to looking at higher time frames where the magic happens, because it's a patience thing. So how do we develop patience? We occupy ourselves and pass the time. We need to pass the time without interacting with the actual buy sell button. And we need to know that if we're not long on the pivot low or somewhere in the middle of it here at the HC, then we're not chasing this. It's done. This is already setting up, but it's done. What you can do on the lower time frame, such as 1 hour, and this comes back. There was a retest already, but if it retests it once again, yeah, you will consider going long back down at this range. So maybe we'll have a punch out here soon. Looks like a green candle is developing. I don't know. But when it does come back down, this level right here will be a level of interest for us. By that time, the ribbon would go over here. It'll pump, go down. And then at least a 4-hour candle awaits where we can make some profit. Now, if this is going to take 4 hours and another 4 hours here, we'll probably come back to a setup in about 8 hours and a profitable trade entry away from that another 4 hours. So 4 hour ATR, that should give us a 1K move minimum from point of entry. Just need to know how it goes here, but we're looking at 1,500. Yeah, about there. So that would be a good profitable trade. But right now, we have made the HC target. From the pivot to about half, there's no trading there.
But there's no way you're going to get the bottom or the top.
I also heard that you guys had a session here, and it was hosted by, I forgot who, but yeah, do those more often and pass the time, delay that instant reward here that you're looking for. Pass the time, and because that's what people struggle with. They're struggling with it takes forever, right? But not really, not really. So realize 3, 4, 5 candles if it's not going. So if the direction is down, then it pauses 3, 4, 5 candles. Doesn't want to. It's probably over. It's done for. In terms of like pause areas right here, right? You can go take a look at what that looks like every time. That's how we print those flags and all sorts of things. But those are not sort of like it has to be kind of rules. It's just probabilities are increasingly in your favor if you consider those things. It's not a guarantee that that is exactly what is going to happen, but when that does happen, take advantage of it and bet in the opposite direction of dumping. That means we need to be pumping next. Dumping, that means how high, we don't know. So even if it's a bear market, after every dump there will be a pump, but it'll be smaller and smaller and smaller. We have a safety net where we use ATR for our take profit target instead of using pivot points or say some levels that we draw, and that's a job for Twitter guys. Those who are like they like to Picasso their way through the charts, and they're like, look at my levels, look how great it is. They feel so good once it gets hit. They're like, look, I told you, it's just to the dollar, to the T, and it doesn't really matter as long as we get an entry and trade at least one ATL worth of that direction. The risk to reward ratio is consistent. Sooner or later, everyone steps on a mine and blows up. I don't care who you are, it will happen. What we have the advantage is that when that happens, it won't leave a dent or a scratch on us at all because we'll know how to manage and come out of there. People who oversize, they could be winning, but they'll lose everything in that one instance. Okay, and they'll restart and be miserable traders again, and that's part of the learning process. But for us, we need to understand how much we're putting in, and not only what we're putting in, but how much is that actually is in terms of our whole net worth. You know, are we going in with 1% and 1% of that into each trade? Or are we 100% in crypto and putting 1% in a trade? That's a lot. Shouldn't be doing that. Smaller accounts, you will not realize it, but your risk appetite increases. And so you will bet bigger than bigger accounts. And guys like there's Elon Musk right there, sending Doge to space. He only put 1%. And you'll say, yeah, but wait a minute, his 1% is like 1.5 billion. Yeah, but he feels it's 1%. And if I have $100 and if I put 1%, then Yeah, that's my 1% is the same as his 1%. What gives me the right to risk more? You have to understand how much you have invested and treat it accordingly. And if that ruins your dreams and expectations and everything that the gurus have told you, then I'm sorry. You will not be able to make money from trading if you don't put in what you're trying to extract. It's not. It's like a proportionally equal sort of like you make $200 a day. You're doing better than like doctor salaries and everything. If you can average that out to about 250 $300 a day times 365 in crypto markets, yeah, that's impressive. I don't make 200K in a day like some of those YouTube guys, but I do make it over a year, and that's a really good. And some days are not worse; they're better than other days. Most other days are average. But what I do make sure is that I can't lose a single dime to these markets ever. Whether it be a stop loss, it happens very rare, or if I win, I have to make sure that I don't look at the numbers and I'm stable with my consistency, reaching that goal of having stable income. Now, let me tell you something. You can trade with relatively low with Market Spy. I would say, let's say that you're only allowed to use 100,000 contracts per trade, sometimes 200,000, with only one round Bitcoin. Now that's a lot, and that's what I do, and that's my maximum, and that's what makes it. So working capital, play it like a game. Try to maintain that amount without adding to it while extracting the value out of this market, while maintaining that working balance. But understand that your working balance will directly influence how many contracts you can open. And if you violate that rule once, believe me, the market will, it doesn't like when it's not respected. When the risk is not respected, it will carry you out. So, expectations versus reality, just like in anything, we have to really adhere to those concepts and principles and understanding about what makes the market what it is, why the majority of people lose, and it's due to very simple things. It's greed, it's emotions. You're watching videos with those thumbnails that are highly emotional, exclamation marks, faces that are just like panicking, guessing, gambling, thinking about is Bitcoin going to 60K or 40K? All that noise adds to your distress and leads you to making bad decisions. So the less you read about news, I recommend you read like some development forums on Bitcoin and see how they have Taproot coming up, how they're enhancing the security features of Bitcoin, what that means for the future to make you feel good. But no analysis bullshit, because what you see here on the chart is what you're going to trade. You're not going to trade someone else's chart.
Right.
Unless it's the platoon, of course. But
unless it's us, of course.
Yeah, see, 1% is look. Avoid these round numbers, okay? Avoid up to 1% is great, but you don't have to. Look at this.
Look at what?
Now on another account, this same number on MS Edu is how much is that? That's just 1%. That's 1% right there. At Bitcoin being at 56K and it's loaded with one BTC, that's what it is. That's 1%. Is it rare? Yeah. Why? Because we had this power move here too. You get at least one or two of these per day, and the size is not the same ever due to the levels that we looked at previously just now. So it's not about, how much percent you make, or it's about you not losing anything. Basically, at the end of the day, if you manage to not lose, you can make 0.001% and keep doing that for a year or two, and you'll beat 95% and outperform 95% of the market. It's just that people don't have that kind of patience, because it's like once in a lifetime opportunity. Crypto, I got to do it now. Are you kidding me? Like 3 years, I want to retire tomorrow. The market knows that, and it's not happening. And when you read those dumbass news where you got 17 year $17 turned to 15 million, that's not you. That's not me. Reading about it doesn't help. It just puts you into a stress mode, and you're like, God damn it! Like, how do these idiots make money, and I'm sitting here struggling? Struggle is a choice. All right, suffering is a choice. You can skip the trades that look iffy. You can trust your analysis more and say, yeah, I don't like this. I'm going to step away because it's not looking good right now. Sure enough, it dumps, and now what you thought was a good trade now is a good trade, because you took the time to wait a little bit. Price came down to a more optimal level. Now you're getting in and trading that original plan that your mind kind of like jumped ahead a little bit and said, get in now. And you're like, nope, I'm going to wait one more candle. But you can't overweight that. You can't just keep waiting and waiting and waiting. And also, if you have your order sitting here and you don't get picked up, that train is gone. All right, that was the plan, and you failed to execute on it. So don't make things harder by compensating for that, just saying, it's okay, I'm going to do it now. Unless you have a system. I'm talking about general trading right now, right? Not market spy, nothing. Unless you have a system that can actually provide you with those entries on lower time frames for a quick in and out action. Those are plenty. I use them all the time, but only once or twice per day. That's it. So that's pretty much everything. Occupying yourself is the main point here. You have to be busy with something else. And not trade. And wait for these setups to come to you, as opposed to guessing and chasing them and seeing, when is the next trade? When is it happening? So, fewer candles, more clarity. 4 hour, look, compared to this chart, compared to this, you only have so many candles to work with. And if you take your same amount of time, the same amount of energy that you used to analyze a 15-minute where you have doubt, here, there's very little doubt. And the entries are more clear. Volume analysis helps greatly to see where the majority of people are, and where there's like no volume confirmation. See, if you start trading that level and become the volume confirmation for others, if you contribute to that place where, oh, now we have a confirmation, you will sell your position to people who see that prices moved, your entry was there, and now they're jumping in. You don't want to be the guy who waits for confirmations, because that's when we start selling. Once there's a confirmation, due to the lag, human nature, we need to start selling, because the market is always getting ahead of itself. It always gets overly excited and overly frightened for no reason. And so we do the opposite when that happens, but not when price is in the middle of nowhere at sitting at HC. That area there, right, is very sensitive, very dangerous, and we need to wait and see what happens away from that level before we pull the trigger. So these are my tips. This was mostly so trader BB Turbo there said that in the platoon was hopeful when prices breached above 56K, lost momentum, looks like heading down below 55 again. Yeah, I mean it's such a short time, you know, he's probably looking at 15 minutes and then there's like so many fluctuations here. Down, up, who cares? You need to give it more time in order for this to be a valid setup. We'll do the full boot camp soon, guys. It's time for a refresher, and I'm really happy that you're all here because we have a lot of people who bought Market Spy and are using like it as an alternative to Cypher or some bullshit. And it's like that, that is not. And we have such great alpha strategies, and it's like some just don't ever use it. Some don't ever use it. We have traders who don't use Bybit Pro. They have it, they're not using it. You know, Radosh, we are in the pit general. I don't know where you're posting. I see these notifications and I can't find the message. Where are you posting? So when we're in the pit, boys, we want to be in the pit general for all this stuff. Let me see. It's in the platoon. Okay, I found it. Talking about your max size, 7 BTC account. So on a monthly pivot support, you're 2x in there. Did I get this right? Me? I'm not. If you're trading, then yeah, monthly. Why not? It's a monthly pivot support. It's a monthly support. So look, let's not be scientific about this and say 2x in there. It's gonna average up to 2x. Okay, I'm just saying. I'm throwing a rough number of contracts that you can trade with high confidence, sort of final destination levels. Okay, it's not. Don't do this. Okay, if you have one Bitcoin and you think that this is, I'm going to start using that number. No, what I'm saying is there are levels that call for bigger size, and there are levels that call for a lot of sort of cautionary approach to trading those levels, right? So where you need to be confident and where you can are these levels, right? When you're looking at monthly, weekly. But the most important thing is the timing here. As we talked in the beginning about this, you know, we need to time how much time decays, just like options. You know, we need to see what the value will be at the end of the month. Is it overpriced or is it underpriced? Because to me, Bitcoin is like a commodity, so it respects those levels. There's nothing else that's moving it, just people's belief, right? I can go 5x on a monthly pivot support if I feel like it, because that level is a great level. If I'm in the mood, I can go 10x, 20x. But what I'm saying is, for stability and consistency, that's what you need to do. It's all about identifying that level, high probability, and see how oversold are you on the momentum, and then pull that trigger. And it's not, and in between that, stay on the 4-hour time frame, 1-hour time frame, occupy yourself, and don't make any moves. Don't average out to anywhere until we're there. So if your entry is here right now, if I go long here now, I'm gonna hold this long until we go lower than this wick down to my monthly pivot sitting somewhere around 50K. Okay, otherwise, the reason I'm going long here is because I think there's another 1,000 points to the upside. Otherwise, why would I be long here and average down here? If it's going back down here, it has the chance to break all these levels, break the low, go even lower, and that's how you get screwed. So, contract size here doesn't matter. You can't size up. So you have to be small, participating, but with an average. These are going to be consistent gains. This can still go higher and you can still exit in profit, sure. But at these levels, you're not expecting price to go lower than that. So you're upsizing. You're going 1x, you're going 0.5x, and you're just sitting it out. Because if that level doesn't hold, you have your monthly where you're adding another one. And that monthly is going to give you a bounce. Because 4 weeks in a row, price can be dumping 4 weeks in a row. HC is going to happen. 2 weeks of an uptrend, straight up bear rallies, what they call them, where prices are so bearish and then they rally for no reason for 2 weeks and bears get absolutely slaughtered, even though they should be adding to their short. What price discovery? CPR on Ethereum has been respected day in and out. It's been coming back for a daily open retest and above daily CPRs as well. It's not useless. There's no such thing as useless. Price discovery mode. I don't know. To me, I'm in price discovery mode every day personally. So I don't know what that looks like, but what we're talking about here applies to everything. We're like literally in price discovery every day, my friends. You and I. Is Amazon in price discovery since 1999? I think so. So go take a look, Radosh. I explain these things so you guys can look at things and make up your mind. So go to Ethereum, take a look at the monthly CPR, and tell me what you see.
Neighborhood.
See, I like that. Call it a day. Niller 10. Post it in the profit wall. That percentage is beautiful, realistic, and can be maintained for days to come, months to come, years to come. All right, let's wrap it up and reiterate all this. Daily CPR. You're not looking to use it on Friday. You start using it from Monday. Weekly CPR. You start using it at the end of the week to project a move towards the next week. Monthly is when you have at least 2.5 to 3 weeks of price action, worth of price action, bouncing between the weekly CPR.
Fuck, I missed it. Talk to me
So
about that.
give me this and give me this and make it. That's not on Monday. So we started here. This is a weekly CPR, and give me another 10 days. Today is the 12th. This can happen in the next 10 days. Right here. And you always look back and you say, damn, I should have been more patient. Yes, you should have. And you should have been on a 4-hour to a daily time frame. Remember, we're gonna own this, and I'm hearing rumors like people calling for 60K. Guys, we talked about this from this level right here. See this yellow dot? This is where we said we're going to go to 60K, and it'll probably be a good short there. We'll exhaust. We'll retest 60K. The spill shoulder over here, closer to this level. People start calling once we have a pump like this at the peak. They ignore all this, and they think that everything goes up forever. And then we have a reset. So imagine what can happen the next 10 days. This is your window right here. This window down to the monthly 50K CPR, and you're looking at challenging the previous high. Our levels are still intact. Tapping this green box finally to R1 at 61 or thereabouts, and an overperformance thereafter. How will this happen? Simply help me flip TC. Give me a Monday weekly open above that level and maintain it. So let this go. Correct back down to the open. Tap this level at HC from here to here. Make people think this is a lower high. Rebound from here and rip. Produce a wick over here, come back down, and stay here forever. Go sideways, slaughter all the pigs, all the greedy ones, and then make a move. Probably bleed out, spike, and then something else. Beyond that, I don't know. But this is what we're looking for the next 10 days. We're not jumping and making videos and saying Bitcoin is going to 60K right now, live. Let's give it some time to stay on a higher time frame to benefit from. And how do you deal with it? How do you deal with this higher time frames? You must occupy yourself with something while keeping an eye on the chart, checking back on it every few hours and not making any moves, watching these CPR levels, watching for baseline reclaims on lower time frames, and watching your momentum when you think there's exhaustion to follow. So 1, 2, 3, 4 candles sideways, it's thinning, so this white area merges with the gray area. You know it's gonna lag. So by the time you see a green dot, you're late because you have a candle already away from a very good level. And if you're sizing up here without using my rules of getting on a small size here, average down here, and then final entry at your 50 levels, the 49 level down there. If that's not ideal, go all in here on a high probability directional trade and put your stop at this wick. We already talked about why. You know why the stop goes only here and nowhere else in this range. Want to be a bit more risky and give money back to the exchange? Put a stop on this wick. You have to trust it. Don't trust it? Put a stop at S again. Say most likely it's too obvious, not going to tap it again. Understand that we're very early in the week. It's only been how many days? 1 day and 20 hours. It's just Wednesday. We just started, and we have a dump weekly. So this is going up for the week to come. Simple as that. How do we enter on this? Well, we need to produce a little pullback, or we need to climb up here, conquer this level again, get rejected somewhere around here. So this is a high probability level where we're likely to go back. That's 58. Once we conquer 58, we're going to retrace a little bit, go back up, retrace a little bit. Not going to see that kind of drop, but basically you're looking for an entry at the open, weekly open, or at TC. So this will be the range for us to trade once we conquer here. And I think that's likely to happen. And then off we go. So while everyone is getting excited, talking about these levels, like few seconds before they seem obvious, we're talking about it like weeks ahead, and we're containing ourselves by not following, by doing something else. And I'm telling you, the best way is to watch a movie or play a game, because entertainment makes your time pass by so fast, and it's necessary for the 4-hour time frame. Because if you're just sitting there on the 4-hour time frame and you go yawn, nothing is happening, BTC, it's a stable coin, and only 4 hours pass and you're like, BTC is a stable coin now because 1 hour is flat. Meanwhile, it's a bullish accumulation. And you start making these moves on the 5 minute. You're going, is it going up, down, up, down, up, down? And this is how you get wrecked, basically. Like, it's not bad. It's pretty clean over here. It's pretty clean.
Yeah.
It's not bad. It's just it's more stressful, calls for more commitment, and looks scary. Looks unbelievable. Like, but yeah, it's how many trades you can get. Like I lose counts with the pyramids and the setups on lower time frames. There's so many trades you can make, and the management is the same. It's just your holding period is shorter and you're out within the next candles, and it sucks when candle moves by $50 and you think you deserve more. That's when you make a mistake. Even if your entry is here, your exit should be here. Like, you're not looking at this. Why? Because you're on a 5-minute time frame. You don't know that this is coming. This could be the last peak, and then we go down. And because of that, our mind starts playing games, and we don't want any games. We want some consistency here. So 1 hour is noisy. 4 hour looks beautiful. That's what I was on. And when 4 hours is done, let me take a look. If we have a window on 12, we just closed it. Now, I don't know why, but when this thing was down here, right? like, are you seeing this window? About 12 hours ago, like when? One day ago. Wow, time flew by so fast. One day ago, this thing was literally right here. We had a $2,000 window there. Look at that drop with the jackrabbit. Now the problem with the jackrabbit is that when you go and wait for the candle close, higher time frames, you have to understand the nature of this. That this starts pumping before the candle closes. It's in progress. So while it looks good, you actually had to be accumulating the jackrabbit to a specific target level. So, for example, for me, I had a white line here, previous vortex support line over here and over here. And that window, we're going to creep up to that level. So not too bad, right? And when you squeeze your chart like this, you realize like that's a very small move for a 12-hour time frame compared to all of this, right? That's a very small move. When you zoom in like this, it's all about perspective. When you zoom in and you're like, holy crap, I could have made so much money here. Let me just measure this wick over here. Oh my God, that's 1,500, another 2,800. And now, away from the pivot, we're up by 3,000 points. Hell, even if I just took like this one little candle over here to the window close, it's 1,500. Yes, you would have been absolutely correct in that decision. And but the thing is, it's done. The window is closed. The pivot is here. Pyramids all over the place. Everything we talked about played out. So, do you see me in position? No, because it's done. It's done, son. We're finished. What happens next is anyone's guess. So we'll need to play the setup tomorrow. Hopefully those tips helped you. Stream here more, and go ahead and stream some movie here or something. So just jump in and BS and wait for this to consolidate. And when it happens, you can just ping and say, I think it's time. I think it's time. 4 hours later, guys, I think we need to get our guns and go blazing because it is time to go long at this level. Simple as that. And then whatever, we take home one candle, done. And we don't care about the rest. Because tomorrow, well, it is tomorrow now already, but we'll probably have another trade. But we'll see. By the way, my concern, if this is I don't know, Bitcoin usually doesn't do that, but if it's a retest, then yeah, it's possible to see the 50K level if this doesn't hold. If you have maybe a double top, like if this level breaks, we're going down. So keep an eye here. So basically this wick right here, if we lose the wick, put it simply, if we lose the wick, we're going to take a major spill down. That's why I'm not trying to yeah, there's 60K, but whatever. Even if we go long here and get one of those FOMO candles here, that's all we need tomorrow, right? If this keeps pumping, goes retraces a little bit, final blow off top. There could be an inverted head and shoulder that's in development. There could be a bigger one that's coming like this. There could be another scenario where this trumpet right here is playing out now. Once we retest it, maybe it's going to correct a little bit, bounce here, go sideways, produce a bear flag, and then break down this style. And that breakdown will call for 50K level. A little lower, definitely 50K. And you can overshoot. And that'll be like one massive double bottom here. So a pattern after a pattern, as this progresses, it will print new, give us new data to work with, new information, new stuff to look at. But for now, as you can see, we're not even consolidating. We did it, and now we're going up. I don't know if it was enough consolidation here, but seeing a previous performance, yeah, I think that's enough. Then again, get rid of this line, and suddenly, like there are no issues about it. There's no resistance. It's just psychologically blocking you to make that decision. But anyways, I guess when I drew this, I had a reason for it, so I'm just gonna keep it in here to respect my previous analysis, because the previous analysis was like the state that I'm in right now is probably it's like 5 a.m. I have to go take a little nap. It's been a long day for me, but when I did this, I was rested, refreshed. I was thinking clearly. So there's something to this level. It's not like I did it when I was under stress or pressure. So then I'm just gonna keep it and see how it performs against this previous analysis. And tomorrow we'll see if there's a setup. Now I was not calling on this because of this wick over here, right? It was today in the platoon. I just had no desire. I was like, I'm gonna play this one little candle because you're looking there on 1 hour. You don't need me to call these things unless you're absolutely lost, and there's no reason not to. Any time frame we go to, there's a setup.
Nothing told us that.
Here's 1, divergence 2, exhaustion point 3, pyramid 4, baseline reclaim 5, momentum short-term trend flow 6. Wick 5, same on 4, 30, even better. Mag 7, perfected Mag 7 setup, both instances from here and here. One on the retest, the second one is just to produce this continuation. Then we have, all this stuff is just, it's so incredibly useful that basically the platoon calls are clear-cut interpretations of whatever's going on here on market spies. So technically, you can do this anytime. You have to be able to manage this this kind of volatility on lower time frames. And in order to do that, you can take a small sampler number of contracts, keep it in there, switch to a higher time frames, and add to them, keeping an eye on the window and the exhaustion of momentum, delta here, and guessing and thinking in terms of probabilities that it's time for it to go up. It's going to close the window. In order to find sellers, you need to go to equilibrium zone 1. It can't just, for example, when it dumped over here, right, and it came back down, this bounce over here came to EQ1 to find more sellers in there. So there's a, that's where they are, because they're not gonna, the smart money is not gonna short the bottom. They'll be probably found here. If this is a level of interest, they'll be sitting right here. And this is where we go back down from this level. Or we reclaim it, retest it, and continue. And there's a chronological order right now, timely. from 5 minutes all the way up to the 4 hour right now, there's been baseline reclaims and they're all holding, all being retested. So 5 minute retest on the 15, 15 minute retest on the 30, 30 minute retest on the 45, 45 minute reclaim retest on the hourly time frame. And 4 hour reclaim, it'll probably exhaust like this. Go sideways a little bit, and then that's gonna give us an entry. So I say we have about 8 hours till our next trade. No, the window is closed with a wick. Like as soon as the wick is a closed window. I consider this to be a full closure of the window, the wick. As soon as there's a tap of that 5 EMA, to me that's expired. Unless I have some other information that will override that. For example, what we talked about, 5 candles sideways, 3 to 5 candles sideways, doesn't want to go down, oversold momentum, then yeah, we could probably go higher. And then, of course, I said, well, if we close the window here, do I have any open on, say, 8 hours or 12 hours? Is there more significant? Yeah, and there is. And we just closed it now. So this closure here on 4 hours didn't really do it for me. So then now we're closing it here. That's a closure. And on 12 hours, for sure, we just close it right there. You know what, Spence? Questions is what's going to crack the nut here. The more we ask and the more we share, the more we learn. That goes for everything in life. So I'm really happy because sometimes I don't know if everyone picks up on this, but it's good to ask and verify. Great session. I wasn't there unfortunately, but try to run those more often. See if you guys can find some clues on the charts. That was turn this thing into an actual trading pit here. The more you spend time with it, the more you can kind of like nail it through and through, drill it through your head again and again. It's how we learn, basically. It's like skiing. The more you do it, the more comfortable you get with slopes and advanced turning points and everything. So this is no different. It's not my channel. You guys own this place. This was created as a republic of traders. That's right, republic of traders that that want to have that kind of freedom to respectfully do whatever the hell they want. And I think that's that's what the pit is for. But you did it in a platoon. I would say next time maybe do it in the pit voice to give all the spies a piece of the pie. Also, as the platoon is restricted access, and there's way more people here that would have been interested. I'm not sure. Maybe you did it here. I forgot. But anyways, oh, okay, yeah. Yeah, I thought it was in the platoon for some reason. I don't know. Cool. This is bullish as hell. This is getting a reset. Nice little pickup.
This is bullish, right?
These levels sometimes I look at them and I say, why don't I have an order sitting in there just in case? Because every time they get hit, it's precision. But this is where it comes in the technicalities of this. Well, I'm not a level trader. Drawing these lines using old school boomer analysis. So markets are a bit more sophisticated. It only appears that it's a valid. I love it when traders say if my level gets invalidated. Uh, there's no such thing as invalidation or validation. It's all in the mind. We have to trade what we see, and like I said, be part of that confirmation. Not wait for the confirmation, but create the confirmation for others, so we can exit. Poor analysis, yeah, I know that sounded weird. True. Ask what's his face, uh, Peter Brand. That's what I'm talking about. You know, it's kind of. Let me throw this out before I go to bed, but little rant. There are like these famous analysts on the internet that have called once in their life, like these cycle peaks, and they just got lucky and they stuck to their guns for like years on end and saying this is going to be the top, and they get it right, and that's all you need, and that's all they claim. They have it on their wall as an achievement that this analyst called successfully called the top of the market, and now he's calling for the bottom of the market, right? Uh, and trust me, guys, you don't want to be part of that crowd that is competing to be right, to be calling levels. Because how are you actually making money and sustaining this as a viable form of hobby that is, financially rewarding if you're busy with cloud aggregation. So if you're always looking to, I asked Peter Brand, you called it, but did you trade it? No, of course you didn't. Did you short Bitcoin with all your might, 100x, if you called the top? No, you didn't. You were sitting there in disbelief watching it fall. And when it fell a significant amount, you're like, yeah, it's too late to short now. I'm going to wait it out. And you waited it out. And you wanted to call the bottom, but you were so shocked that you couldn't. And the bottom happened and it started going up and you couldn't believe that. And that's the bear market where everyone's like, oh, terrified. And so people like Peter Brand and others, you can call it whatever you want. We called it. We called it. We're calling it. Guys, we've been calling in the platoon since the beginning, like nonstop, these nice moves. Maybe not precise, like from here to here exactly, right? We had those moments of glory too, but these things don't really matter. Um, count your ATR, exit, repeat, do this for a few years, and you'll be on your way to beating all these guys who are sitting there calling things and not actually trading. Because you're on the front lines. It's a little different talking about being a soldier and then actually having to defend and shoot and then getting shot at, right? So it's a lot different. So what I'd like to say is try to avoid people who claim that I have called the market top. This is what I'm famous for, and that's it. Michael Burry, that man is respected because he actually called it. Not only called it, but actually went all in. Now he's been trying to replicate that ever since, and he's smart. He waits until 2, 3 years into the bull run and starts calling the top, and it's like he's been very unsuccessful so far, getting wrecked, selling early here and there. But he's now forever biased to be short market, which dynamics are changing a little bit, and we may see a prolonged, extended continuation of this bull run this time around. Um, so yeah, don't get stuck in invalidations of levels, because that's going to scar you emotionally, and you won't be able to trade, which is what matters in the end. Yeah, Sam, we all know, but people are still signing up for their whatever it is that they're pushing. They're still following their Twitters. They're still swallowing every word that they say because they call the top. You know, they're still being affected by those guys who were right once in their lifetime on a market cycle. Michael, sorry, market cycle, and now uh, because that was such a great call indeed, when you listen to them, you have reason to believe that what if they're right like this time? Last time was pretty nasty. Now, what if it happens now again? And so that completely screws you over, messes with your head, and now you're losing yourself as a trader to their whatever it is that's driving them. You know, ego. I don't know, money, greed, emotions. What else is there? It's probably both. So they play with greed and emotions. They induce fear in the followers or overconfidence. And that's the problem there. So we need to sit back and only rely on the market as our guiding point to tell us what it's doing, but we need to be patient with it. We need to give it space and time to tell us what it wants to tell us uh, in order for us to do this consistently. So there's patience is the big thing in this. Big. That's the big overview. We have all of that stuff is in the boot camps, drilled multiple times again and again, and nothing has changed. Not that many videos. They're a little long, but the setups themselves are very. Uh, oh, DSR is the one that it's right there in all the boot camps. They're in chronological order: 1, 2, 3, 4, 5. The understanding Market Spy's pivot system (DSR). It's is there. And excuse me, I mean no offense, but I'm seeing people request things like what do the green squares mean when we have like basically recycled that 1,100 times through all the videos. And I know people don't have the time to study, but when you drop 1K on a system and you need to ask what the squares are without like deep diving into the deeper end of the pool there, I don't know. It's a little strange to me how these questions come up. But good on you, Spencer, for taking all the notes. That should really help. Gotta do some research. It's not, yeah, but it's not over. Once everyone is caught up and is doing okay, we'll continue to the next modules and things that we need to know for more advanced stuff. But you don't start when you're training in karate. You don't start doing advanced kicks and choke locks and everything, because you need to learn that chop first. You need to throw some punches first in the market, and we have more than enough to cover all of that. Leverage start cross. So about cross, we will do a boot camp about that. Um, how's the schedule? I don't know. I'll ask around. I'll see if maybe closer to Friday. Ernesto, that is a reality check right there. You're absolutely right. Something that can eventually replace your job with all the savings that you have. Your first number one priority is to maintain that balance so it can work for you. And you have to be able to learn these patterns, understand them, because I believe that they're timeless. We're going to jump into other markets soon and look at some of the key differences between uh, price behavior and character of Bitcoin and the way it moves versus something like Forex and other commodities like gold, copper, and you know um, hogs and stuff like that. Lumber. There's a lot of different things that apply to, but it's all the same. It's all the same in the end. I believe that what you have seen here so far with Market Spy is what it will do eventually is it's going to fade in the background, okay? And this is again for those who are willing to go a little further. This is going to fade into the background where you will not sort of depend on the system as much, where eventually the vanilla charts with a single RSI take over, and you sort of begin to understand and feel and have that market spy vision happening in your head without actually looking at it. I don't know if that makes sense, but this is where I want to get you to, so that you learn how to wait, you learn how to size, you learn how to borrow against your collateral, aka trade with leverage, and what to do when you have a bad entry, and how to quickly take profit when you have a good entry, and repeat all of these processes again and again until this becomes your sort of long-term profession. Maybe manifest. Maybe if it's a hobby, it can become uh, like what are we looking at? Like what percentage of like I say in North America, people make 100K a year doing something like this. You have to understand that it's no different than any other job. It's just as stressful, just as shitty in terms of it just seems that it might be it's not gonna pay you more money. It's gonna feel like it's the best job in the world because you are in control of your paycheck and only you. But it still requires that same sitting, that same effort, that same dedication, that same uncertainty uh, for tomorrow, and it doesn't give you any benefits and insurance and coverage and all that stuff. You still have to pay taxes from it, and et cetera, et cetera, et cetera. But it's a skill that can basically make you be able to feed yourself and your family wherever you are without risking much if you learn that consistency. And that's going to take, say, a couple of years maybe, depending on your goals. If you're here to stack sats, doesn't really matter. This could be a continuous journey. If you want to start selling, so for example, when I make profit, right, it doesn't matter what the price is, I go and sell that. I withdraw and bring it back down to the original deposit on the account, and or sometimes I withdraw and I don't sell it immediately. I just hold on to it, and then when I need something, I'll sell it. Okay, but that's a whole different thing compared to others who are here for to call tops and bottoms, and then like it's not a game. It's not a game. I do this because this is what I do, and you should be doing it because this is what you can be doing if you choose to, and it has nothing to do about other people. It has nothing to do about nothing to do with people's personalities, egos, or who they think they are, what they do. It all comes down to, can you not lose any money in the space where when you tell people that you're trading, they look at you like you're like this person with a problem of addiction, or you need help. So if you can answer that question and say yes, I don't lose money, even if I don't make money, you simply say I don't lose money doing this. Yeah, that's where you want to be, because after that, everything else is a byproduct, is a side effect. The money comes as a result of you not losing anything, or you become so good with your risk that you don't care what people think. You know that this is your balance, this is your wallet, and this is your life, and you can't care what people think. By contrast, how you stack against all the other glorious millionaires out there. and Wolves of Wall Street. That doesn't really matter. Case study, that guy Bill Huang, who got wrecked. Yeah, he got wrecked, but check out his profile. That low key mofo who's been doing big things with a relatively small account size, and where he became like one of the silent deadly assassins out there in the markets. He's a great inspiration for someone who's made billions and then lost it all in one day. And we should study carefully about like what went wrong, and where he went crazy on leverage, and why. What made him be so confident? So he succumbed. The market is a force that takes the best and just shatters them. So let that be a humbling reminder to all of us of what is possible and what is just a fantasy. Yeah, what you set your leverage to on Bybit will reflect in Bybit Pro. Bybit has no control of leverage. If it's set to cross, your leverage is determined by your contract size. If your account is 5K, 1x would be 5K. If you borrow 10K, 10 contracts, 10,000 contracts, then that would be 2K, and so on and so forth. And you can borrow up to 100x of your collateral. So if you have 5K, 5 times 100, that's how much you can borrow. And that will scale your leverage up to 100. So Bybit Pro allows up to 100, but you don't need to set it manually because those contracts determine that leverage anyways. And if you use isolated, you're going to get liquidated just because you're probably confused if you're using it in isolation, thinking that you're gaining some advantages there. It's literally for people who have problems and they can't control their risk. It's the best that the exchange can do to limit them and say like set it to isolated because you're a degen and you can't play with cross. Yeah, that's what it's there for, to put a physical sort of limit on how much you can borrow because they know you want to borrow, so they give you 25x. Actually, it's scaled. It's floating leverage on cross, and you need to use that so you don't think about liquidation points ever. Now, with that being said, guys, thank you, and I'm gonna go and take a 4-hour candle nap. No, probably more than that, maybe 6. It's like 6 a.m. now, so I'm gonna nap it out until noon. Horrible, but it's what happens when you don't know how to plug hard drives into your motherboard and you spend all day. See, I had to learn something new today too. Um, to assemble my battle station so I can start streaming and recording again because my hard drive was failing and I couldn't do any videos. But we're on track, and yeah, let's see what happens. I think there's a small chance we come back here again. We'll see what happens tomorrow. No rush. There's no need to guess anything, okay? As long as you're in the green zone. Where's the green zone? The green zone is the baseline. Once we fail the baseline, you're in the red zone, and that's when you start scaling in and looking for an entry. But as long as you're in the green, this can dump all the way to here, and you need to be a buyer. 1,000 contracts down from here. You need to be a buyer. It'll probably go down to like this level HC. Could take forever, chopping through CPR zones, but also this cone over here, this trumpet, could be a retest. Bitcoin doesn't really do retests, but it could be one in the making. So we'll see how this performs. Be back in 8 hours, and I'll see you guys then, because I think that's how much we have to have our next setup. By that time, we'll already know what shape and form we're looking at here. Is it a potential bear flag, or Bitcoin is going to do its usual and destroy all the bears? We'll find the answer. So until then, either trade low time frames or don't trade, or do something else. I don't know, and then come back to this once the setup is ready and you have it. Because this one's already played out, as far as I can tell. Like 1, 2, 3, 4, 5, 6, 7. See, that's what I mean. When you have a good entry, price instantly starts moving in the direction of your trade, and that's on a setup here. I make it sound too easy, but let's say you have 0.1 Bitcoin and you throw 5K in here, anywhere in here, the median. You're thinking, okay, wick here, high here, I'm going to go and enter here. So it doesn't matter. It chops through this. Now you're part of the setup. Now it starts moving away from there. That's what I mean. It's a good entry. And then you can take profit literally on like 1, 2, 3 candles later, right here, before it turns to green. And then have 10% maybe remaining if that's your thing. Okay, adios. I'll see you tomorrow. Thank you. Hopefully these tips help. Delay your gratification and increase your time in occupation. Be occupied with something. Forget these charts. Go to your 4-hour time frame and just wait. Look how simple and beautiful it is. Only a few setups. All would have been profitable anywhere you look. Have your levels ready. And remember that CPR bad boy. It's not really CPR. It's just simple classical support and resistance levels within the blocks of the CPR, which is a momentum indicator, believe it or not. And so that's why these levels are points of exhaustion or acceleration. If we break below them, momentum at that point becomes, strongly biased towards more downside, double the size of the previous. So 5K, if we break the red level, just to give you an example, you can expect another 5K down. 5K down is roughly your 51 low open. This is a high probability level. It's possible to retest this level again. So you're looking to play this area, but that is only closer to the end of the month, not now. Now we're going to chop here, and the week has just begun. We need to wait a little bit. It's only Wednesday. Give me a break. See you guys tomorrow. Cheers.